Let's switch to that southern gentleman in Utah.
All right. Well, the southern gentleman in Utah is ready to go, I guess. As you can see from the screen, I decided to stick or to return to the healthcare sector with TECH.mp4 Corporation. By sales, it is what we might call a small company, $269 million worth of sales in fiscal 2010. Their fiscal year ends in June, so that ended just a few months ago. And one reason that I settled on TECH.mp is that, again, those of you who know that I look at the sector radar, as we talked about last month, I guess it was, sometimes getting ideas. The sector radar right now has financials being the top sector, and technology and healthcare are still tied for second. So I was interested again in a healthcare or a technology company, and TECH.mp pretty much came out as the highest quality and highest potential return on the screens that I did at Manifest Investing. And Ken walked you through some screens early on, and if you noticed, TECH.mp did pop up on the Manifest ranking screen, which looks at many of the same sorts of factors as I look at. So anyway, I was interested in the healthcare sector. Didn't find a technology company that really jumped out at me, though I did look at a couple, and maybe we'll move that way next month. But the other thing that I liked about TECH.mp is it is a biotech company as far as generally classified, but it's what I like to call, and I'm stealing this term from Diane Grace, a pick and shovels supplier. They are not a biotechnology company in the sense that they do not sell pharmaceuticals based on biotechnology research or enter into that sort of thing. Rather, they sell biotech products to the researchers. They also sell some, about 7%, I believe it is, of their business is hematology or blood-related products that they sell both to the research as well as to hospitals for actually checking their blood testing equipment. It's not actually blood testing equipment, but it is calibration of the blood testing equipment. So I felt, that it's perhaps more stable than perhaps a more traditional biotech research and development company. And as you can see from the screen that we've got in front of you, the sales and earnings over the past 10 years have been quite consistent up to 2008, and essentially the company's explanation for the flat sales in 2009 and 2010 are related to the worldwide recession. As companies have cut back on their research and as healthcare providers have cut back on their spending, TECH.mp has suffered. Now, actually, they began to see a turnaround in sales the second quarter of fiscal 2010, and in fact, actually in the fourth quarter of 2010, their sales started to increase by about 5.8%, 6%, if I recall correctly. So they see some turnaround, although they don't expect 2011 to be a particularly strong year going forward. And by the way, I actually should qualify what I just said. The other down factor impacting TECH.mp, about 45% of their sales come from overseas, from Europe and the Far East. And in 2010, the dollar actually rose relative to the European currencies and the Far East currencies, and so that also depressed TECH.mp sales. So the 5.8% growth that I referred to in the fourth quarter was organic growth before the currency translation effect. And so again, what the company is saying though is that their actual business is seeing an upturn, although it's not being reflected in their reported figures because they're reporting in dollars, and the dollar was actually strengthening relative to their relative to the local currencies for the sales. As far as, and just to mention again, that breakdown is roughly 55% United States, about 30% Europe, and the remainder, which I believe is about 15%, if my math's correct, is Far East, and China is between 2.5% and 3%, and is actually their most rapidly growing country at this point in time. All right, let's go ahead and take a look at my judgments on the backside, I guess. You can see here, I guess, Mark, would you go back to the front side? I was explaining. There we go. Just before we move on, if you see historical sales growth has been a little over 10% historically, and I just chose to go forward with 10%, which is in line with what the company's looking at. That's also in line with Value Line's projection. I believe the Yahoo analyst consensus, that is on the upper end of their range, but there are 5 analysts followed by Yahoo, or that Yahoo mentions, that follows TECH.mp4, and their median growth projections for the next couple of years are about 4% in 2011 and about 8% in 2012. And if you actually look at the ranges, like I said, we're in the upper end of that range, but not at the very top. Okay, now let's flip over to the backside. You can see in section 2, the pre-tax profit on sales and returns on equity are roughly flat over the last few years, so not strong positive trends, but certainly no drastically negative trends either place. And in fact, the company has been trying to improve their cost controls in 2009, 2010, knowing that they would be suffering slowing sales.
Those numbers are also huge.
Yes. Yes, they are huge. But not a whole lot of difference, really, falling from 59.8 down to 58.1 either when you're up there. And as you might guess, they are a strong leader in their industry as well. As far as PE ratios, I generally take a look at the lowest 5 highs and lows for the last 10 years. I think that's an Alt-M on the toolkit if you're at all familiar with Toolkit 5, and I believe Toolkit 6 has it the same way as my starting point. And in this particular case, that worked out fairly well, although, well, I take that back. I was looking, I did not think I used those. I went ahead and used the lower PE of 25, which I think is based on, if I could just flip over here myself, don't worry about it, Mark,
okay,
on the screen. I'm just flipping to double check on mine. Yes, that's what I thought. Oops. I'll be right. There we go. The 25 is essentially the high PE for the last fiscal year, is where that came from. And the low PE, as you can see, is roughly the lowest average for the last, or for 5 of the last 10 years, is where that came from. That's a little bit on the low side relative to the manifest figures, but I chose that because of the near-term uncertainty over the company's growth rates. Interestingly enough, something that I do like to do, and maybe I'll throw that in some slides in the future, but I also look at median PEs for a company that shows nice steady growth as TECH.mp4 does over the last 10 years. And interestingly enough, the median high PE is about 31, the median low is about 21, and lo and behold, that gives you a median overall PE of 25, which is what I ended up choosing as my high. Interestingly, that is the average PE that Manifest's analysis comes up with, which I believe corresponds with Value Line's projected median PE in TECH.mp4's case as well. So all of those judgments ends up giving me price appreciation up to 118 over the next 5 years, and then looking at our total return, if you want to flip down to there, there we go, gives us a par of 12.6, a bit below the Manifest par, as you can see, based on using book value and return on equity. And my total return runs just about the same as Manifest's projected return, for those of you who follow both of those. And again, the essential reason for the difference is, as you saw, the 25 PE that I used as the high is actually the average PE used by Manifest. My average PE is closer to about 22, so I was just a bit more conservative given the near-term uncertainty is the reason that I did that. But in this particular case, I think the company is certainly an industry leader. It's high quality, and once the overall world business environment turns around, I think has some strong growth prospects.
Very good. Well, thanks, Si.
Thank you, sir.